So guys, let me give you my take on the Fed and the potential for layoffs. So as you guys know or don't know, the Federal Reserve has, for the last 12 or 13 months, they've kept the Fed funds rate the same, between 5.25% and 5.5%. That's what the Fed funds rate is. Now, what is the Fed funds rate? The Fed funds rate is just the rate that banks charge one another. It's the interest rate banks charge each other for what they call overnight lending, usually short-term loans to each other, right? So that when that rate, that Fed funds rate, is raised, like it was up until 12, 13 months ago, it went from almost zero to around, in the last 3 years ago, about 3 years ago, to 5.25% to 5.5% now. When it's raised, and these banks have to charge more interest for loans to each other, then that's when we see our rates go up that banks charge us, right? The banks, as you see now, credit card interest, credit cards are short-term loans. Credit card interest are what? 27, 28% interest right now, the average credit card. The loan, if you want to go get an automobile, has gone up, right? If you want to pay for an automobile and have a loan for that, car payment. But all these things have gone up, these short-term loans, because the Fed has raised rates in order to stop us from borrowing so much money. Because when they raise rates, it means that money costs more. So the Fed is going to have to start cutting these rates and lowering the rates to incentivize us to get out there and go buy more stuff, right? As the Fed starts to lower the rates, lower the Fed funds rate, and thus our interest for credit cards, car loans, personal loans, whatever, goes down, we're going to go out there and start buying more. But until they cut rates, guess what's going to happen? There's going to be a lot of uncertainty in the economy, in the American economy. Why is there so much uncertainty? Because we're looking at layoffs. We're looking at the potential for businesses to be a little nervous. And when there's uncertainty in the economy, my fault guys, I had an airplane going above me. So the Fed, I believe, is going to make this cut of the Fed funds rate. They're going to lower the Fed funds rate, which means they're going to make money cheaper to borrow. And I think until they do that, and we see a little switch in the uncertainty that's in the economy, we're going to see more and more companies laying people off. I just read a story a few minutes ago about Cisco laying off a whole bunch of employees. And then, of course, there's the story in Memphis, Tennessee about Kellogg's maybe laying off a bunch of employees. We're going to see more and more of these layoffs because of some of this uncertainty we see. Now, here's the thing we got to keep in mind. When the Fed cuts rates, probably at their next meeting in September, when they cut the rates, they're only going to cut it maybe 25 basis points or 50 basis points, which is 1/4% or 0.5%. Now, when they make that cut, we got to remember this. This is really important. Lag time, right? It's going to take some time for those cuts and everybody to get out there and start spending more money and borrowing more money and pushing the economy to start growing, right? We have around that time, around September, like 6 weeks after the Fed makes this cut, which I think they'll make in September, we've got a presidential election, right? More uncertainty. So as we get more and more of this uncertainty, we're going to see problems with companies that are feeling this uncertainty and doing more and more layoffs. Because listen, the unemployment rate 2 months ago was 4.1%. The latest readings for the unemployment rate is 4.3%. So as we see these layoffs and we see more uncertainty from businesses about what's happening in the economy, we may see more layoffs and we may see that unemployment rate go up from 4.3% to 4.4, 4.5, 4.6, whatever. The point is that we're going to see that unemployment rate go up. And when that unemployment rate goes up, guess what? People get a little more, even though money might be cheaper to borrow because the Fed has actually lowered the interest rates, we're going to see more and more people probably become a little more tighter with their money. Guys, if you're getting anything out of this video, do me a favor and smash that like button below. Also, please share this video with your friends, your family, and your network of people. And don't forget to drop that comment below. And if you're not a subscriber to this channel, please consider subscribing to my channel. Now, let's get back to the video. All of these things in the economy happening, not to mention, the potential for wars over in the Middle East, what's happening in Russia and Ukraine. There's a lot of uncertainty around the world. Look at what Japan did earlier in the week with their stock market, causing our stock market 3 or 4 days ago, to go crazy and drop. So my point is that there's a lot of uncertainty out here in the economy, in America. And so because of this, guys, it means businesses are feeling some of this uncertainty also. And the most expensive thing for any business is typically going to be its labor, the cost of labor. So when you have a lot of uncertainty, the first thing a business does is not go lower their prices, is not to go change their equipment. The first thing they look to do is start laying people off and cutting some of the cost of labor, right? So you're going to see more and more of that take place, I think, over the next couple of months. And yeah, the Fed is going to be lowering rates. They might lower the rates 2 or 3 times this year, right? Before the end of the year. But that's going to take a while to actually trickle down to reach us as regular retail investors, retail consumers, regular folks. And so businesses are first going to be worried about the geopolitical stuff going on. Not to mention the presidential race and all the things happening here domestically first, right? So just be looking for that. I just want to send a shout out to you and a warning and say, look, pay attention to what's going on with these layoffs. I think we're going to see more and more of them. And I think it's because of all the turmoil and all of the uncertainty that's out here in the air in terms of our economy, in terms of what's happening even across overseas with the wars and so forth, and our foreign affairs and how those things are taking place and shaping up. All those things are going to affect us. And the first place businesses look to cut is you and me, workers, regular people, to save cost, right? And if they can save the cost by cutting down their labor, and also at the same time, now they can go out and borrow more money for cheaper price, and they can cut their labor, now they can increase profits and still be in the black, making money, right? Just some things to think about, guys. Listen, do me a favor, smash the like button, drop me a comment below, let me know. Are you seeing the effects of some of these layoffs that's happening? Or are you actually concerned about the layoffs that you see coming up or you see in the news? Let me know in the comments below. Hey, the best person who's going to take care of the old you is the young you. Take care of yourself and take care of other people. Until the next video, peace.